Welcome to TradeTheMBI.com. This is John's reports for the 5th of October. Let's get right to it because we started to see this key meeting point right here where we had the confluence of, midterm buyers in green, all converging. But the problem was that we had the dip of the orange that went below the red, which signaled the potential for a new buy. The problem was that the green stayed below red. And as soon as orange is above green, usually that's an indication that you've got a bit of a failure when it comes to that. So it was no shock that as we got to this meeting point the other day, which happened to be right here on what you would call this little hammer candle where we were reaching the highs, we started to see this breakup of the orange moving above at the same point. And this is a critical factor when looking at the DLC. It's these crossover points and these meeting points where there's a rejection that really have the most potency to them. And in this particular case, if we're looking at the DOC down here, we can see that we had the immediate move of cyan above, which means that shorts overtook the strength of longs. At the same time, short-term buyers were also overcome when our relationship of the orange, which was just basically telling you that shorts had gained the upper hand overall from a daily standpoint. And we talked about it, the ABM levels, as well as the likelihood of coming down to the green, breaking below, and how significant that would be. Much more severe, the move for the NASDAQ. It had started its breakdown earlier, a couple of days before actually, and retraced all the way to the 50% Fibonacci lines on this particular case. So that was a much more significant. Let me adjust this real quick for our viewing capabilities. And corresponding to the decline in the euro because of the budgetary problems that they're having and the recognition that, hey, if the ECB isn't buying bonds from all of these, the pigs as they refer to them, then it's a disaster because there's no free market for them and nobody really wants to buy them, which really means they're not worth anything. So that recognition is starting to come to reality that, hey, there's some significant fiscal problems within the EU. This is no shock because the Fed came out the other day and basically said, yeah, we're shocked. The economy is actually growing when you take regulations out and let the American entrepreneurial spirit just go. The economy kind of grows, and it's so confusing for them that actually there may actually be inflation in that, and so this complete retrace of bonds moving exactly into that 113 area that we talked about, because this is the artificial rates being kept low, and now the market is forcing that correction. But the Fed is also doing it too by raising rates. No question about it. The real question is going to be, though, at a certain point it becomes so damaging deficit-wise, you're already seeing a ballooning in debt because of it. And not really because of a spending situation, even though that's out of control. You're getting a hyper-acceleration because of the cost of servicing $21 trillion worth of debt, which pulls capital out of the markets. And that will have an impact later on, causing rates to even rise faster because of the demand for others willing to pay more to get a hold of capital to increase business, blah, 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 blah. So it becomes a vicious cycle. How they're going to manage that one, has always been the unknown. 10 trillion was one thing, 20 trillion, yeah. And like I've said before, though, they can make it last, but at a certain tipping point, whether that's at 30 trillion or 25 trillion, this is going to be difficult to manage without some major structural change. Oil keeping that elevation. Again, I think oil has been the gold trade because they're using it now as the commodity to hedge against inflation, because it certainly isn't about the availability. There's plenty of that. It does help Midwest producers in that profit-wise. So, there's some pluses, minuses, and this is what the market gauges. Plus, the market's got to factor in that value over time. What the devaluation does. So let's go all the way back on this 5K, and this gives you the broader view, but it was a lot of action. So I'm just going to expand this chart back up, and we'll go to the beginning of the day by just scrolling to it, because it was quite exciting, and yet at the same time pretty straightforward. We talked about this before the opening there. The gold under the 38% started the day, led to the new lows. We ended up with a couple of potential buys. So I marked this P2 setup that, which just points out that we've had a second higher red pivot there. The actual buy isn't until you get the orange below the red, and then it's a matter of following that until it breaks above the green. And if the green isn't above cyan, you know you've got a little bit of problems. And it started to retrace there. You ended up with a new reset of the same thing with continuing higher red, but yellow dots warning you that, hey, the extreme's not quite strong enough to kick into gear to create one of those giant spread moves. And so, boom, right at the 50%, created another down signal. And boy, that one cascaded, because again, you got gold below 38, and boom, that just transitioned it even lower. And then when we started to get into the earliest buy signal configurations that took place, they took place at the start with shakeout below negative 13. Now, that isn't always a critical ending factor, but again, couldn't get an activation. That's what all these yellow dots are warning you. It's like, okay, any pop here is just not going to last. So, to prove it, we got the gold right in the P2, right at 38%. And you could wait for clear delineation from the DOC, which again happened pretty quick, because in this particular case you get an immediate pivot of orange right here, so the dip below the red line, and then boom, the next one, it's above green, which effectively ends it. Not to mention green is already below red. That takes place even before this clear short snake. So I'm just pointing out, though, that you can, anywhere along there could have taken it and still been all right. And then sure enough, that cascades to a whole new factor of lows, where you get the automatic pop signal here right at that negative 20. But again, it's one of those where you got to watch the orange setup on that, and as soon as the orange overtakes it, which is right here, which corresponds to exactly capturing pretty much the entire up move, and then boom, gave the opportunity to short again. Gold at the zero, and that one produced, and then nothing, because you're already at the zero and you made new lows, yes, but was it as significant enough? No, not really. We ended up with the rising red, see from the larger point of view, and there you can see the little L, which is like the signal for long that I kind of transitioned to with the lettering on that one, and produced a much longer run. And then the green above cyan, then you're not worried about the orange breaking above, because that doesn't end it as long as that green is continuing its rotation. And then it was right about here you ended up with the full steel reset coming back from the bottom, and that's what lifted to the final upper stint. And as we came across, we could start to see, again, not able to get to the positive extremes. You need to see those red breakouts to kind of like propel it, and so you ended up with the late DOC spread on this particular one. And it's a little tougher at this one, because you're just not all that thrilled with this kind of short configuration here, because you didn't really have any dips of the red below. So not a whole lot you can do with that kind of a setup. What it does warn you is that you're likely to see that long configuration come in, and there it was, where the positive extremes really propel huge short covering, and that's exactly what that rally was. And the retrace was comfortably going to be right around 28.99, so right at the 29 level, and the deviation went to 15, and sure enough, post-market, what was the low of this bar here? Could still end up reaching the lower 2,975. So within a couple of ticks of right in this first open. The one you really were looking at as a normalized guarantee on that pop return would have been right there at the low at the 2903, and that clearly took that out, which not too far off this 2905 that existed before. We can even move that one down now that we've had plenty of fills within that. So this was quite fun, and it was good to let it all play out like it did. I was putting up the ones that were relevant, but you can clearly see how effective you can be in following some of these long setups. And even if you were willing to just, take that range run right here before this one had the orange move above, or if you waited until the cyan crossed it right there, you'd be able to see that you ended up with your steel reset, which is something we look for. It's a nice strong counter. In this particular case, then you end up with the buys where steel is coming from below, because during the entire time, if you pay attention to it, you had no steel reset. If I scroll all the way back here, throughout this entire drop, this is what we talked about when it gets into that pure decline mode, and that's powerful to note, because if you can take advantage of that, you're going to end up with very strong ability to stay with these things and know when to utilize the ABM and as a support or not. Summing it all up here, we've got the briefest of turnaround positions here from the closeout. You had the ending of that short run right there, and this is something we talk about too, where the steel crosses that red and lets you know, hey, warning. And it happens a lot right around the 50% line. It's very interesting how effective that becomes. Will it have enough to come all the way down and produce actual buy configuration? We don't quite see that yet. We're likely to get a little pop with some consolidation right here. We did have dip below the red line, but when it's at the 50%, you got to respect it, and certainly it's worth taking gains, particularly as we fill the positive extremes. Sometimes you can get overly aggressive and too greedy. Not necessary to do. As always, though, I will keep posting on the Skype chat as needed. I'll be out a little bit late this evening, so might not be too much volume, but I should be back before the market closes and that. So all in all, good stuff. Have a great weekend. Trade well.